Gold went through a long consolidation from 2011 to 2024, where it kind of traded between 1,500 and 2,000 up and down. But that was after the big breakout from 2001 to 2011, where gold went from sub 300 to almost 2,000, about 1,900. So we've consolidated those gains. We broke out this year. I don't think gold's going back to 2,000. I think that's a history now. And we're off, to much higher levels without any resistance. So I think the price of gold can double, can triple from here and potentially go much higher than that.
It has been 24 years since entering the 21st century, and the price of gold has increased 11 times in dollar terms, with the price also rising 11 times when calculated in many other currencies over the same period. Despite this, only 0.5% of global financial assets are invested in gold. The proportion of gold in global assets has risen from 0.2% in 2001 to today's 0.5%. Global financial advisor and expert Peter Schiff expressed a bullish outlook on gold, noting it has entered uncharted territory after breaking out of a long consolidation between 2011 and 2024. He mentions gold's earlier rally and predicts prices could double or triple with little resistance ahead. When asked about the pace of gold's recent rise, Peter dismissed concerns about the speed of the rally, noting that gold had not moved excessively fast. He also emphasized gold's outperformance over major stock indexes since 2001. For most of the 2000s, the stock market experienced a similar bull market, and no investors fled the stock market. Nevertheless, gold has still vastly outperformed stocks in this century. In the past 24 years, the S&P 500 index has increased by 572%. In the same period, gold has risen by 990%, with much lower volatility. Owning gold is like a hidden, well-protected secret. Few people, even professional investors, know that gold has risen by 1,000% or 11 times this century. However, he cites that gold mining stocks remain undervalued, down 15% from their levels before Donald Trump's election, while gold itself is only marginally off its recent peak. Peter links gold stocks' lag to low investor interest, with more focus on Bitcoin and tech. The high value of gold makes it a frequent target for investors, but the natural volatility of the mining industry makes gold stocks a difficult investment. According to Peter Schiff, foreign central banks like China and India have been significant buyers of gold. He predicts rising gold prices will shift sentiment from skepticism to enthusiasm, boosting interest in mining stocks. Now, we present the clips of Peter Schiff's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Gold went through a long consolidation from 2011 to 2024, where it kind of traded between 1,500 and 2,000 up and down. But that was after the big breakout from 2001 to 2011, where gold went from sub 300 to almost 2,000, about 1,900. So we've consolidated those gains. We broke out this year. I don't think gold's going back to 2,000. I think that's a history now. And we're off, to much higher levels without any resistance. So I think the price of gold can double, can triple from here and potentially go much higher than that. Prior to the election of Trump, we were on track for the biggest percentage gain in gold since 1979. Now, we still might get back on track for that. Depends on how December goes. But even if it's not as, the best since 1979, it's one of the best years. Gold's up about 30%. And more significantly, so far this century or millennium, since January of 2001, gold has outperformed the S&P. In fact, it's outperformed all the major stock market indexes. In fact, you can go back to 1999 from the bottom of gold, when gold was, close to 250, and it's outperformed everything since 1999. So you're talking about close to 25 years where gold has beaten the stock market, yet there's no euphoria for gold. There's plenty of euphoria in the stock market. Nobody cares about risk there. But take a look at what's happened to gold stocks. Gold stocks are still down 15% from where they were 2 weeks ago. Just before Trump was elected. Gold itself is down less than 3% from its peak. And it's barely down. I think it closed Friday at 27.15. When Trump was elected, maybe it was $27.50, down $35. That's it. Well, I just think there's not a lot of conviction in gold. And I think that the investors who might normally be buying gold stocks, are buying Bitcoin ETFs, or they're buying MicroStrategy. Remember, retail investors have been selling gold all year. And the selling was particularly strong early in the year when people thought that 2000 was the top, and so people wanted out. The reason the price of gold has been going up is because foreign central banks have been buying. And obviously they know something that the typical retail investor doesn't. They're wasting their time on fool's gold, but they're buying the real thing. You do probably have the Chinese, consumers. They're buying, or in India. But I think at some point the price of gold is going to rise high enough that the greed is going to start to replace fear in the market, and then you're going to start to see investor interest really picking up in the mining stocks. And I think they have a long way to go just to catch up to where they should be, let alone to get ahead of the curve, which ultimately they will. The gold stocks will start anticipating higher future gold prices and pricing that in to the present stock price. So we haven't gotten anywhere near that yet, but it's coming.
Regarding proposals to sell U.S. gold reserves for Bitcoin, Peter Schiff criticized the idea as disastrous, labeling Bitcoin fool's gold. He argued that gold's liquidity makes it a reliable reserve, unlike Bitcoin, which he believes would collapse under large-scale government selling. In terms of historical appreciation, Bitcoin has significantly outperformed gold. Since 2015, Bitcoin has experienced growth of over 11,000%, as you can see from the Bitcoin historical price, while gold is up around 72%. However, gold is still significantly more valuable, with a market cap of around $18 trillion versus Bitcoin's $1.9 trillion. While highlighting the crypto industry's sway over politicians, Peter accused them of promoting taxpayer-funded Bitcoin buys and tax-free gains. He warned that these moves could make U.S. taxpayers the ultimate bag holders of what he saw as a Ponzi-like scheme. Let's get back to the interview.
I think that's basically treason on the part of Loomis to try to say we should squander our gold assets on Bitcoin. It'd be one thing to just even recommend buying Bitcoin, but to pay for it by selling our gold. But, she wants to say it's not going to cost the taxpayer money because we're just going to sell this worthless gold, that it's just gathering dust at Fort Knox. We'll just sell that. But of course, it's going to be highly inflationary because now the people who own Bitcoin, who sell it to the U.S. government, have a lot of cash to go out and buy stuff. But at the end of the day, Bitcoin is not a viable reserve, because what makes gold a good reserve is that if the U.S. government ever needed to sell the gold in an emergency to prop up the dollar, there is a very deep liquid market that could easily absorb the selling. But if the U.S. government tried to sell a significant quantity of Bitcoin, the market would crash. In fact, the only reason that Bitcoin is, knocking on the door of 100,000 and probably going to be through by the time anybody sees the interview, right? Yeah. But the only reason it's there is because everybody expects the U.S. government to buy millions of Bitcoin, to spend billions and billions of dollars, waste taxpayer money, which I think is really the ultimate irony, because Bitcoin was created as supposedly this is the alternative to government, where it's decentralized, we're rejecting fiat money and government, yet now it's completely dependent on government because it's the government that's creating all the demand. And so it's not that the free market is choosing Bitcoin, it's that government is using the coercive power of the state to basically force people to buy Bitcoin. Because when the U.S. government buys Bitcoin, I'm an American citizen. I'm not choosing to have my tax dollars used to buy Bitcoin, right? The government is doing that against my will. But what's happened is you had all the money in the Bitcoin industry, the crypto industry, was able to corrupt all these politicians by donating to their campaigns and funding them. And the payback, right, with the return on that investment that they're looking for is the government to buy Bitcoin. They also want the government to make the gains on Bitcoin tax-free so they can sell all their Bitcoin to the U.S. government and pay zero taxes on the gain. So it's a great deal for them, but it's a disaster for the country. Hopefully, Donald Trump, stands up to this and doesn't sell out the country. Well, it's already at current market value. Everybody knows what it's worth. Nobody claims that it's $42 an ounce, and the government certainly wouldn't sell it for $42.22. It just shows you how much value the dollar has lost since we went off the gold standard. Now you need $2,700 to buy what you could have bought for $42. And in fact, you could have bought it for $35 in 1971 when we closed the gold window. So that price doesn't mean anything, and it doesn't create some kind of windfall to say, oh, let's value it at the market and then sell it get rid of our gold.
Right.
That would be the worst monetary mistake the U.S. could make. Remember, the British sold a bunch of their gold back in 2000. They marked a low. They sold out about $250 an ounce. Now, certainly, I mean, it's higher price now, but given all the inflation that's been created and will be created, makes no sense to sell it, especially if the goal is to buy Bitcoin instead of gold. Because Bitcoin has none of the attributes that give gold its value. It's counterfeit gold. I said it's fool's gold, and it would be horrible if the U.S. Taxpayer, American public, was the final bag holder in Bitcoin. The exit strategy for the guys that got in early in this Ponzi pyramid chain letter, however you want to describe it, they ran out of chain in the free market. They got Wall Street involved with all the ETFs, but that couldn't do it. And that I think if Trump had lost this race, Bitcoin would be collapsing right now. So rather than being, almost at 100,000, we'd probably be below 50,000 and falling fast.
The gold market continues to see a lot of buyers at this point, as the Friday session has seen a lot of upward pressure. Although gold has hit new record highs, many experts believe prices will likely continue their upward climb. Given Peter Schiff's bullish outlook on gold, how do you think global markets will respond to the growing interest in traditional assets like gold in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.